It is Sunday, May 5th, and this is a special courtesy Insider Access May Outlook. So, of course, within Insider Access, we had our May Outlook, but this is being provided as a courtesy to the public, as I do from time to time. I provide videos, tutorials, items that I believe are helpful. So we're going to start with some notions for May and kind of work in reverse, and I'm going to explain our outlook for May. We've been dead on. We called the bear market, the bull market turn. We called December, January, February, so many different months we called making new highs. And so I want to update on what the outlook is for May, of course, because I don't like to do it in hindsight. I want to do it before the month starts. So here's a snapshot from Discord that I took early in the morning. And we're having some fun with it this past Friday. This was Friday, May 3rd, as you can see, 8:58 a.m. So it's before opening bell. We talked about how mega fund managers and headline analysts were saying Apple is dead money. Bitcoin is heavy resistance right now. It's time to short. And the Feds are holding interest rates. That's hawkish. And I'm going to explain my note, just some tongue in cheek. I don't have much of a personality, but I try to get in some jokes from time to time and see if they work. And within insiders, I had the exact opposite view, as we've beaten the market so many times, because I believe my team is the best work there is, and I come from a professional background, so we have a different lens. We're not trying to be sensational. Our view was Apple was turning bullish. Bitcoin was at a bullish point, and we viewed the Feds as being dovish. All jobs data down, quantitative tightening is easing. It's a mouthful. And so I want to kind of reverse engineer and explain that so everybody understands. So we're looking at the S&P 500. So what did we do with that notion? Well, that served us pretty well, because coming into this past week, as we'll just back up here, maybe I'll go to a larger time scale to get a better look, as we use that to scalp in, let me move back to the 5 minute. There we go. Use that to scalp trade coming into the FOMC to the upside. That was a huge move. And what I noted when we made the pullback to insiders was not to worry. My view was intact. We felt that what we saw from the Feds was dovish, and we believe we'll make continued moves up. And so we had continued moves up. And this was just the idea as we were breaking out. So I left that line on the page here, the 50210. But more importantly than that is why? Anybody can give a positive idea. And this is one of the concerns that I have for everyone when it comes to the world of FinTwit and sensational media headlines. You know, people don't like to say things in advance and look at their track record. And if you can't explain why you have a trade idea, then it's a guess, because you could flip a coin and the markets will go up or down. So if tails says up and head says down and the markets go up, you're right. But if you don't know why, you'll soon be departed from your money because it's guesswork, right? So I want to give everybody a bit of a breakdown, and that's part of our outlook. So what we saw coming in, and this was the note, and you saw it from Discord, was my view was that jobs data was softening and the Feds were, in fact, dovish. So let's start with tapering, right? So the Feds are set to slow the balance sheet runoff starting in June, and that's substantial from a $60 billion cap to 25. So you've heard of quantitative tightening and quantitative easing. So while everybody was fixated on the rates, of course there wasn't going to be a rate change. We knew it was going to be held neutral. That was something that the markets had priced in, the bond markets had priced that in. Everybody and their uncle knew that it was going to be neutral, meaning the Feds weren't going to raise, they weren't going to cut. But that's not the only element involved with the macro cycle. We're also looking at quantitative tightening and easing. And we saw an easing from 60 billion to 25 billion. And interestingly enough, I shared a graph that kind of showed a little bit about how the markets look when we're easing and when we're tightening, right? And based on Treasury QRA. So when things got looser, this is what we did. That's what happened in the cycle. When we started to tighten, this is where we went. And this, of course, this chart has the inverse effect on the markets. So as we went up during this period, markets were going down. As we loosened in December, you saw the markets go up. And as we started to creep back up and you saw the 10-year yield, right? This is the impact on the 10-year yield. The markets went down because we know that there's an inverse correlation between the 10-year yield and the markets. What does that mean in simple English? Well, if people can get a good enough return on their money, a safe return from U.S. government bonds, they start to move out of the markets and into government bonds because it's highly competitive, right? So we start looking at risk premium. And if that lessens, there's more appeal to equities. That's one of the items. So that's what we saw going in, but let's expand a little bit deeper. So I want everybody to have a good understanding of this because, like I said, if you don't have a good understanding, what's the point? The markets were concerned about stagflation. So Chair Powell, if you take him at his word here, he's pretty, I think there's a little bit tongue-in-cheek. He said, I don't see the stag and I don't see the inflation. So almost mocking it, saying, we're not in stagflation environment. So that's taking him at his word, but that is him being dovish and him being bullish on the economy. But moreover, we looked at here's some critical data that I posted up. What are we actually seeing? Because everybody talks about how, oh, we've got a really hot labor market. That's what you hear, and that's why people miss trade ideas. And that's why the experts get it right, and a lot of the talking heads who aren't worth their salt. I don't think that everybody that you see on television is talented just because they have a position out there. There's a lot of reasons people will get that. It's like any job. You move up and get promoted, but it's not always the most talented people. So there's some positive readings coming in. So we saw job openings per unemployed person is at the lowest since August of 2021 and 1.3, right? Quits fell to 2.3%, falling lower, right? Because fewer people are quitting when the labor market is tighter. It means people are worried about their jobs. So it's not as hot as it seems. 2.3%, that is a pre-pandemic level. So right away, we have two important markers. One is the lowest in multiple years since August 21. One is pre-pandemic, right? And so we could take a look further. Job openings, that's JOLTS report, lowest since 2021, right? What else do we have? Well, when you look at it on a chart, you can see the trajectory is falling. This is jobs. Job openings per unemployed worker, right? So when there's 2 job openings per every unemployed worker, that means this is a hot labor market, right? There's jobs everywhere. You can have a job, it's easy. So the economy is going to be roaring. When it starts to tighten up, then we see that the economy is in fact tighter, and so is the labor market. So we see that from that chart. What about job openings? Because you've seen some positives, some negatives. Well, when you step back, just like looking at a stock chart, that's what you see, right? So that gives you an idea on our overall view. And then, of course, company earnings are performing well. In fact, we're seeing the highest surprises, positive surprises on company earnings in years. This is Q1 2022, see 22, 23, and here we are in 24. This is Q1. So that is the highest number of surprises that we've seen in multiple years. But we go on from there and we find more data here. So I want to actually get to a couple of our trade ideas and then just show everybody how we did it. Well, if you look at Apple, and you saw that from our first image, where I sort of tongue-in-cheek said, there's a reason that I was jesting at mega fund managers saying Apple is dead money. So let me get to that for that trade idea. Let's back up and take a look at the charts here, right? So this was Apple. And I took a short position, and I'd been short on Apple for a long period of time within insiders. In fact, there was, I believe I had a Twitter, it was Twitter at the time, live space where I said, Apple's dead money. And that's the joke here. And I continued to refer to Apple as dead money because I said, look, as the markets move, Apple is not making gains or appreciating and moving positively and getting a return on investment relative to its peers within the QQQ or SPY. So it's underperforming the markets, right? Lower beta, you're not getting the alpha. And this was Apple. We were taking short positions. We finally got to this point where I said, I'm neutral on Apple, right? So this is where I said, my position has changed. I no longer see Apple as anything of interest. We're not shorting it. It remains in the dead money zone. We're neutral. And as Apple started to break down, I updated insiders and said, we are now, and this was in April, right? You can see timelines here. In April, we switched to being bullish. I said that I feel Apple's finding a bottom. We were starting to take trades to the upside on Apple. This is one that we took to the upside. That was a big win. And I said my take now is bullish on Apple. I think Apple's going to right the ship. I think that you're going to hear a little bit more in AI, some better moves with their balance sheets. I didn't quite predict the stock buyback, but of course we said better moves with their balance sheet. And part of the reason that we joked about this whole dead money idea is, let me see if I can pull this up. And I never like to point out specific names. It just so happened this screenshot pulled up a specific name. I'm sure Tom's work is fantastic. But you started to see 2 weeks ago all of the networks, and I just assume they must have insider access memberships. They started to use the exact same term, and they were saying Apple's dead money. This is why we think Apple's dead money. It's going nowhere. And my joke was, of course, not quite a joke, but my jest was, just as the so-called headline analysts and the market fund managers start to say Apple's dead money, that's exactly when we pivoted. And here's what Apple did. Made a massive gap up, right? This is pre-earnings. This is 172 into 184. So I'm sure you saw some insiders posting, and I posted this to the timeline, 500% trade on Apple, and a variety of others. And I always apologize, insiders, if I miss any tweets or don't get to retweet, I always apologize. I never mean to miss anything, but it happens. I get tagged from time to time. And this was great on Netflix, which we could touch on as well. But that's a big break for Apple. And we feel that the markets are going to be constructive in May. the big next item, the big next hurdle is CPI. And if we see a cool print on CPI, the markets are going to rocket, because right now the only apprehension for most is what we're seeing with CPI, right? What we're seeing with inflation. And I think that brings in a lot of money off the sidelines. And the last thing I think I'll touch on, as we broke down our overview for the markets and why we think it's bullish, why we think the Feds are bullish, what we see from jobs, we see the labor markets cooling dramatically. Last item was Bitcoin. You saw that we talked about Bitcoin. Well, I was sort of mocking or jesting towards others again and saying, look, everybody was talking about how Bitcoin is negative, Bitcoin is negative. Our first entry months ago on Bitcoin was 27.5, right? And this was some time ago. We've had multiple entries since, and our recent entry into Bitcoin, right? And this was as the market conditions turn, because my ideas will align with what I hear from the macro perspective. And just for those curious on my methodology, we start with the macro, we start with the big picture and then narrow it in. Then you integrate technical items and options flow and news and all that other stuff. But first look at the overall environment and then narrow in on your trades. When I hear people say, I only use technical, I only use the following, I think, why would you not want to be as successful as possible? Why are you a zealot to one type or another? It's simply, the only way to think of it is you would discard good data that's helpful, that can be read. It just means you don't know how to read it. There's nothing else that makes sense. So we saw it as positive. This is at 59.8. Here's Bitcoin right now. And that's as a Sunday evening. And this is the update for insiders, because when I put this post out in Discord, this was Friday morning, right? Bitcoin's bullish. We felt Bitcoin's bullish. We're in for a trade on Bitcoin. This was Friday morning. Well, this is where we were on Friday, right? 5.3. This was closer to the morning. No? Let's see here. Yeah, this is around the morning. Yeah, we're consolidating around the morning. This is where we were, in that 62, 63 area. Well, Christmas comes early for everyone again, right? Here we are at 64. So that's it for the outlook for non-insiders. Insiders, stay tuned. We're going to pivot over or switch to a different video format as we have some trade ideas lined up. To everyone else, we like it. We're constructive. We think that was a positive move for Apple. Obviously, we laid out our case. The markets we're seeing jobs soften rather dramatically. We're seeing multi-year lows in terms of job openings per person, quit rates. We're seeing the jolts move in a very steady direction, and we think that lends positive to the markets. Remember, macro takes time, but reading ahead of the markets. While everybody was staring at the interest rate decision itself, we were looking at all the surrounding data, being that job openings per unemployed worker, the jolts data, the quantitative tapering. And as I say, if you don't understand macro, it's one thing, but lend it to what your work is. Why not have the best edge possible? This is a lot of information. There was no crystal ball. There was no guessing. It wasn't just the SPY and the S&P 500. We know that macro also lends to better conditions for Bitcoin. So that's it for tonight. I hope this is really helpful to everybody. It just helps you reframe the markets. Start big and narrow in. Like any project, lay out the blueprints if you're building a house, then start to lay in on the minutia. You never say, I only focus on the finishes, right? You focus on everything, build the foundation and go from there. All right, guys, have a great night.